Are you trying to start up a new business or possibly growing a business to the point where it's becoming successful and actually making money? Hey, that's a good problem to have. However, sooner or later, you're going to come up to a financial institution, or possibly you're going to try to set up some software such as QuickBooks or some of the more integrated software packages out on the market today, like NetSuite, which is an internet-based software package, and it's going to ask you to set up your accounting. Now, in doing so, you'll have such terms brought to you within the software called an income statement or a balance sheet or a general ledger, setting up your accounts. What we're going to talk about today, in brief, is a profit and loss statement, or, in other terms, an income statement. It doesn't need to be as scary as it sounds. It's really very simple. What I'm going to do today is try to give you a few quick illustrations of what a profit and loss statement or income statement really is. And let's break it down into perhaps some household terms that would be much easier to understand, and looking at that scary old database and trying to understand what parts go to make up this income statement. First, though, let's cover the income statement. Here are some quick illustrations for you. We're going to talk about a profit and loss statement. Now, what a profit and loss statement really is gives you a picture of your income versus expenses. Now, it seems like it's much more difficult than that to look at a profit and loss statement. We'll call that a P&L for now. But it's really not. You really have two main sections of a profit and loss statement. You have a line in the center, hypothetical line, but above the line you have revenue, or let's call that dollars sold, or another way would be earned. Now, below revenue, you commonly have what's called cost of goods sold, or COGS, cost of goods sold. And this is defined by the dollars you paid for goods or services to be sold. To be sold. Okay? Now, there are many items that can go in there, but for now we'll talk about just the main two groups. But if you deduct what money you brought in, and if you deduct from that what money you had to pay out, the difference here is your gross profit. That's my favorite part, since my name is Stephen Gross and my last name is Gross, so gross profit's good for me. Now, look at this in other terms. The revenue, in equating that to what maybe you would see at home, this would be equal to maybe a paycheck. So this is the paycheck that you get from working. Your cost of goods sold would be, what does it cost you perhaps to get to work and back? So maybe you have your gas that you have to put in there. You have your lunch. You have to eat lunch. Maybe if you have to supply your own office supplies. Not too many people do these days, but we used to sometimes. But your gas, your lunch, your office supplies, things that you spend in order to get to work and back. After you spend those dollars, you would then have what we would call as gross profit. Now, again, this is above the line up here. Okay? Now, below the line, you have gross profit. Below the line, now you have your expenses. Now, in your expenses below the line, let's just write that out. Expenses. Below the line expenses for your home, for instance, could potentially be your electric bill, because you have to live. Could be your food bill for home. Could be your let's put gas. Could be your house payment. It could be all those things associated with your expenses at home. Now, after you deduct this from your gross profit, so this is a great big minus, this is a positive because that's money you still have, you minus these items down here, and then down here on a profit and loss statement, this would be called net profit. Or, in your family situation, this might be called savings. Or, another way to look at it would be party money, party dollars. I think that everybody understands party money. We all like to have some of that, go on vacations, things of that nature. But anyway, I hope this helps you understand what an income statement or profit and loss statement really is. To summarize, the revenue portion, or above this line here, the revenue portion, which is here, is the dollars that you actually bring in from selling your goods and services. The cost of goods sold, which is this line here, is what you have to pay yourself for those goods and services that you're going to sell. Then that brings down your gross profit. Now, in the series that we have coming up on AskTheBusinessBuilder.com, in your premium member series, we'll go into great detail on things such as direct and indirect expenses, fixed and variable expenses, items that go to make up your profit and loss or income statement that are very important to being able to budget your business and understand how your business will work in the future. Considering your expenses for your family home can be quite complex as well. If you have daughters like I have had, you might have cheerleading shoes and trips to go on. If you have sons, you may have football uniforms. Those are all expenses that go below the line, and this is the line right here. So you have to really be careful with that. But anyway, if you have any further questions, please visit us at AskTheBusinessBuilder.com. That site will be up here soon. We hope to have that up for your ability to sign in and participate in our forums and our blogs and other hopefully groundbreaking and easy to understand explanations of business terminology and forums and so forth. Anyway, so this is Steve Gross for Ask the Business Builder. Have a great day.